Well, that's it, guys. It's officially happening. What's happening? The housing market correction. Let's not call it a crash yet. I know some people don't like that word. They get offended by the word crash. They don't agree with the word crash. But I would also agree that right now, there's no housing market crash. That does not mean there won't be one in the future. But what we are seeing is the beginning of a correction. And how do we know this? Well, what have we heard the last couple of years, guys? What has been the common theme throughout real estate that has made it sound like we're never going to be able to buy a home, creating all this FOMO? What was it? Low inventory, right? The amount of low inventory across the country has been scaring people into thinking they're never going to be able to own a home. However, according to Realtor.com, they just released their inventory numbers for December. And guess what, guys? Across the country, there was 33,251 more new listings, okay, in December of 2023 than there were in December of 2022. So inventory is picking up. We are seeing a surge in inventory. What we're seeing right now is the beginning of a correction. And this correction is starting to make its way through this market little by little. And we know this because inventory never goes up in December, guys. I can't remember a time since I've been paying attention to the housing market when inventory goes up in December. You always see a crash in inventory between October and January because everybody takes their house off the market for the holidays and no one's listing. No one is trying to sell their house at this time. But what you're seeing is more and more sellers trying to catch the tail end of this market before it's too late. And you're seeing a lot of homes that do get listed go completely unsold because the price is too high, combined with today's interest rates. Most buyers out there simply cannot afford what people are asking for these houses, which has been pretty evident on our walks here out and about through the neighborhoods. And the reason why we can call this a correction is because all that's happening right now is the housing market is starting to revert back to how it used to be, right? We're starting to see inventory start to go back to where it was before. So it's not like this surge in inventory is alarming, right? It means that we're starting to see things normalize. And one thing that they said in the Realtor.com report is that the median sale price as of December grew 1.2% year over year. So while that is a small increase, it basically means prices are flat, especially when you take into consideration inflation, guys. When you look at the fact that home prices were up 1.2% in December year over year, when adjusted for inflation, that's more like negative 2% because of, even if you take the government's CPI numbers at face value at 3%, whatever it is, when we know it's higher than that, right? But let's say it's the 3%, that means your house still lost 2% in value adjusted for inflation. So homes really aren't gaining value anymore. Like the whole run up in the market is over. Now it will be interesting to see where things go during the spring selling season, if things are really going to ramp up, if we're going to see a lot of new listings, are we going to see people rush back into the market and buy? Are we going to see prices go back up? Because if we look at history, chances of this happening are actually pretty high, because even during the 2008 housing crash, guys, like the crash lasted for basically 4 to 5 years as prices were coming down. But as prices were coming down, we had still the same housing market cycles that we're seeing right now. You could still see prices go up for a seasonal part of the year in the springtime, for example, even though the overall trend is that the market is coming down. So it would not be abnormal to see home prices go back up this spring incrementally, like maybe a few percentage points, right? That's not out of the question at all. Now the problem is that everybody's living different realities right now with real estate, and that's why we get comments from all over the place saying, well, I'm not seeing this and you're saying that, blah, 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 blah. Well, when you break down the inventory numbers of where is all this new inventory coming into, it's apparent that the southern region of the United States is getting the lion's share of this inventory, because in December, the southern US had a 7.7% growth in inventory versus only 0.2% in the Midwest, and it even declined 8% in the Northeast. So the Northeast saw a decrease in the amount of listings during the same month. That's why people can say, well, I'm not seeing this. What you're saying is not true, Michael. No, it's not that it's not true. It's that it's not the same everywhere. I don't know why some people can't understand the difference, but the reality is everybody's going to see different market dynamics depending on where you live. Here we have a $5 million waterfront house, but they actually started asking a lot more than that. They were asking $5.67 million back in January of 2023. So they've already been trying to sell it for over a year, no sale, had to come down significantly on the price. And that's exactly what happened to them when they bought it back in 2020 for $1,325,000. The owner was asking 1.7, so even they got it at a significant discount even before the pandemic. And once again, somebody looking to make a quick buck here, which is not going to happen. It's never going to be easy money. There's no such thing. Property tax bill is $30,000 a year. And one area that this correction has not hit yet is how fast homes are selling, because even though we have this uptick in inventory and home prices remain relatively flat, houses are still selling on average 2 weeks faster than they did pre-pandemic. That is due to the fact that we have such low inventory. At least that's my guess at why it's happening. Buyers that are serious out there in the market are much more willing to make a faster decision to get into the property, knowing that there's not that many other good options out there. Versus when we have a lot of inventory, people have the ability to kind of kick the can a little bit, look around some more because there's so many different options to choose from. But we can see these trends slowly starting to reverse, and here's why. Because on any given day throughout the month of December, there was 4.9% more homes for sale than there were a year ago. That's a pretty significant increase, guys. I think that qualifies as a surge in inventory. The total number of unsold homes increased by 3.6% year over year. So as you can see, the tables are shifting to the point where inventory is increasing. We're seeing more listings sit on the market and not selling. And this is just going to continue, guys. This is going to continue to get worse in 2024. This trend is not going to reverse anytime soon. So in order for things to normalize in the market, we need to see an additional 36% increase in inventory from where it's at right now in order for inventory to bounce back to where it was pre-pandemic. And if interest rates continue to go down throughout the year, which I wouldn't really count on it, guys, even Realtor.com, they're predicting that the average interest rate throughout the year is going to be around 6.4% for most of the year. So it's not like we're going to see this huge drop in rates this year and magically that's going to fix everything. But who knows? We could see that drop in rates. It really depends on what the Fed does as well. Because one thing we do know is with prices and rates where they're at the moment, people are just out of the market, guys. In fact, the year was dead in terms of sales. In fact, the amount of sales was way below where they were during the same time in 2022. Now, the National Association of Realtors, they're anticipating that as the Fed starts cutting rates this year, if they cut rates, because we'll see, right? We don't know exactly what's going to happen with that. But they say when they start cutting rates that we're going to see home buying activity tick up this year. We're also going to see home builder activity tick up. Now, their price predictions for 2024 is that real estate prices are going to remain flat throughout 2024, guys. Oh, well, I guess that means they're actually going down when adjusted for inflation, right? Because we still have this 3% inflation that's not going away. So if home prices remain flat, what it actually means is your house is losing value when adjusted for inflation. So that's one thing people have to understand, right? You watch my videos?
Yes.
Oh, cool, man. What's your name?
Nice to see you. Christian.
Christian.
Yes.
Nice to meet you, man.
Nice to meet you. Thank you for all your information you gave us.
Oh, yeah, you're welcome. I appreciate you watching. Thank you.
Nice to see you.
All right, you too. Take care, buddy.
You too.
Like I said, guys, you see me out in the wild, just say hello. Nice to meet you, Christian. Another thing that's sounds kind of funny because it's something that we have not seen yet to date, even with this huge run up in the housing market and all the money that was printed and everything, is they believe that rapid wage growth should improve affordability this year. So who's getting that rapid wage growth, guys? Because I don't know anybody that's getting rapid wage growth, you know, unless you're just one of the lucky ones that gets a huge raise this year. That's not happening to most people. Most people are lucky if they get a raise that keeps up with inflation. Just like how inflation pushed prices up, okay, that works in your favor with home values going up when inflation was raging. Well, now the opposite's starting to happen because inflation is still higher than the Fed wants it to be, but since home prices aren't growing anymore, now prices are actually going to be coming down when you take inflation into account. It's the same concept as if you had $100,000 in the bank, okay, at the beginning of 2024, and let's say the inflation rate stays at 3% throughout the entire year. Well, even though you still have that $100,000 in the bank, it only has $97,000 worth of purchasing power now. Same goes for your house. The sticker value of the house may not have changed in 2024. It's actually worth less when adjusted for inflation. Lawrence Yun, yeah, our favorite guy over at National Association of Realtors, the chief economist, he says that the Fed's going to cut rates 4 times this year, even though they never said that they were going to cut rates 4 times this year, but that's what he's telling people to get everybody all juiced up about getting back into the market this year. That's going to increase inventory and provide buyers with more flexibility. Well, I do think we're going to see more inventory this year, and I do think that's going to give buyers more flexibility. And he's also projecting that the amount of homes that are going to get sold in 2024 is going to rise by 13.5% compared to last year. They also predict that rent prices are going to continue coming down. So like I said, guys, like I said at the beginning of this video, what is happening this year? We are starting to see the correction, okay? Things are starting to correct back to where they were little by little. And since these cycles take a very long time to happen, that's how you know that this is just the beginning. There are no forces at work right now that are going to make this turn around overnight. Like, oh, we're going to see home prices continue to shoot through the roof. Like I've seen people say that that's what they think is going to happen this year, guys. There's no evidence or reason that that would happen at this point. Even Lawrence Yun himself here is saying that he believes that home prices are going to remain flat. He believes that new home construction is going to continue to increase the housing supply. I mean, they're talking about 1.5 million new housing starts in 2024, guys, and over 1 million of those being single family homes. Like, talk about an increase in inventory. That's huge. Got the leaf blower guys around us, starting to feel like home, huh? Now here's the other interesting prediction that Lawrence Yun has for 2024 is that he expects housing inventory this year to rise by 30%, okay? Well, what did we just learn from the previous story is that housing inventory needs to increase by 36% for us to be back to pre-pandemic levels, guys. So if Lawrence Yun's prediction is correct, by the end of 2024, the housing market inventory should be back to pre-pandemic levels. Gotta love it. Now just remember that these are not my predictions, these are Lawrence Yun's predictions, who is the chief economist at National Association of Realtors. But I actually think a lot of the stuff he's saying could come true this year because, you know, he's not giving these wild predictions like he was the last couple of years, talking about prices going bonkers still and the market just shooting to the moon. Now he's saying that the market's going to remain flat and we're going to see a 30% increase in inventory and home builders building houses like you wouldn't believe. Guess what that means, guys? That means good news for people that have been waiting on the sidelines. Like I've been telling people, I told people over and over again, there's gonna be more opportunity in the future. Stop believing the FOMO that you're never gonna be able to own a home. There's gonna be more houses, and lo and behold, here they come. They've already had that huge 35,000 increase in homes in December. That's just a preview of what we're gonna see for the rest of the year. Now here's something interesting I wanna share with you guys. Take a look at this picture. 10 ounces of this would buy an average home in 1920. 10 ounces of these will buy you an average home in 2023. And in case you can't tell what those are gold kilo bars. So 1 kilo of gold right now it's worth about $63,000, give or take, okay? I don't know how much the average home cost back in 1920, but let me tell you, 10 kilos of gold will buy you more than the average house, guys, because 10 of these is worth about $655,000. You can buy a pretty nice house almost anywhere in the country for that price. How'd you like living next door to this? Fun, nice and peaceful, huh? Sit in your backyard, have some coffee, and listen to the concrete machine all day. Now, the reason I wanted to show you guys this is, number one, to let people know that don't know much about gold and silver, is really to just show how much gold and silver has kept up with the real cost of everything, guys. Like, that's why they say that when you own gold and silver, it's a hedge against inflation, okay? And a lot of you who watch my channel for a long time, you probably know I am a proponent of this. I own gold and silver myself. I fully believe in it, and this is why. Because that same 10 kilos of gold could have bought you a house over 100 years ago, and that same 10 kilos of gold today could not only buy you the average house, but an above average house in cash, okay? That is tremendous, okay? That's a tremendous amount of purchasing power that gold has retained over the years that your dollars will never retain. For anybody who's looking for a place to put some extra money, guys, like, I always think it's a good idea to have some gold and silver, and this is the reason why. Because one day when you pull out that gold and silver in 20 or 30 years, that's going to retain its value, and it's going to be able to continue to keep up with the purchasing power of things that we need to buy, most notably housing, guys. Like, if nothing else, obviously, nobody's going to the grocery store and buying groceries with gold and silver. You're not going to Best Buy and picking up a new TV with gold and silver, right? But you can buy real estate with gold and silver, and you can buy all this stuff with gold and silver. You just have to convert it to dollars first. Now, it's probably unrealistic for a lot of people to save 10 kilos of gold and silver, considering that 1 kilo of gold is about $63,000, right? That's probably more money than most people have in their savings account, let alone times 10, right? But it just goes to show you that if you pick up the little bit that you can afford now, that in the future, you don't have to worry about losing the value of that money like you do with your dollars. Anyways, this is not even a promotion for gold and silver. It's not sponsored by anybody. It's just me telling you that I think it's a good idea because of what history has shown us here. The next thing, the Fannie Mae Home Purchase Sentiment Index just came out again, guys. And realtors are jumping for joy because the amount of people that said it's a good time to buy a house rose by 3%, okay? It went from 14% up to 17%. Oh my God, let's jump up and down and celebrate, guys. 17% of people across the entire country think it's a good time to buy a house. That's still very bad. Yeah, is it an improvement? Sure. But when you look at the rest of the data here in this Fannie Mae survey, it kind of paints a different picture of what people are thinking, guys. Clearly, it still shows you that a lot of people don't think it's a good time to buy a house. That's number one. And ironically enough, the amount of people saying that they think it's a good time to sell actually went down. It went down from 60% down to 57%. Well, that's kind of strange because technically it's still a seller's market, so why would less people think it's a good time to sell? Well, maybe they are realizing that no one's actually out there buying houses and that, real estate sales are in the gutter right now. Maybe. Here's an interesting one. Home price expectations. The amount of people who think that home prices are going to continue to go up in the next year went down as well, from 41% to 39%. So less people now think that we're going to see home prices continue to go up in the next 12 months. And a lot of people have been getting tricked by this announcement from the Fed, because take a look at this. The amount of people who expect mortgage rates to go down in the next 12 months jumped from 22% to 31%, guys. That is a 9% increase over the last survey. So clearly, a lot of people think that the Fed is just going to start cutting rates, just like Lawrence Yun is saying. We're going to see all these rate cuts this year, and mortgage rates are going to drop through the floor, guys. Yet Realtor.com is predicting that the average 30-year rate throughout the year is going to be 6.4%. So I wouldn't be getting your hopes up on that one, but I'm not saying it's impossible. But still, a lot of people are concerned about losing their job, because the previous survey, 76% of people said that they're concerned about losing their job in the next 12 months. Well, it only went down to 15%. So still, a lot of people, the vast majority of people, are concerned about losing their job this year into 2024. And this is how you know that the economy is not going to continue exploding right here, guys. Household income part of the survey, okay? The percentage of respondents who say their household income is significantly higher than it was 12 months ago increased from 19% to 20%. So only a 1% gain in the amount of people who say they're doing significantly better than they were a year ago. That's almost nobody. That's almost no gain at all. And I'll tell you one thing for sure, the prices of these houses, of where they're at right now, cannot continue to sustain into the future if a bunch of people are not getting massive increases in wages, guys. It's that simple. And a lot of people just told you right here that, 75% of them are still fearful for losing their job, and only 1% are doing significantly better financially than they were a year ago. So how is that a vote of confidence for our future? 2024 is probably going to be the year of the great slowdown, guys, the great normalization, the year everything starts coming back down to earth. And we're already seeing it, and we're like barely 2 weeks into the year. So anybody who's been banking on, the housing market and the stock market and everything shooting through the roof this year, I think you're probably going to be sorely disappointed. If you guys enjoyed this video, make sure you subscribe to the channel. And if you don't want to wait for my next video to come out, check out this one on the screen right over here, and I'll see you in the next one.